let's talk about what to look out for with infinite banking, index universal life, whole life, insurance pitches from salesmen right after this. All right, look, if you've been following the channel for a little while, you know that A, we help service members and vets achieve financial freedom, but B, you know my feelings and thoughts on whole life, index universal life, infinite banking, whatever, right? What the Rockefellers did. But instead of just attacking it, I'm going to give you a couple things that you can do to really find out if this person actually A, understands their policies, and B, has your best interest at heart, right? So first things first, man, these guys, ask them to have the conversation in public. Like if they're trying to pull you off a Facebook group or whatever, and they're not willing to talk to you about what insurance is publicly or answer your basic questions publicly, obviously there's stuff they're going to need your personal info for. But if you're just asking basic questions and they're not willing to answer that, probably a red flag. So look, insurance, it makes sense if it's set up right. Every insurance person will tell you that they set it up right and no one else does, because it's not a very regulated industry. There's not a ton of training and people don't generally know how to use it. But here's the thing. First off, it's a saving strategy and or cash preservation strategy more than it's an investment strategy. So if someone's telling you it's an investment strategy, run. If they're telling you the stock market goes down sometimes and that's going to hurt you over the long term, they're wrong. Run. The stock market's average return is higher than the insurance average return. Yes, insurance doesn't lose value, but that only helps you when the market has a massive downturn. It does not help you when there's a cap on how much you can gain and it goes the other way. Long term, you win in the stock market. Index funds for life. And real estate. If they're not willing to give you real examples, real numbers, real people to talk to, but here's the thing. One of the biggest things you can ask for is direct recognition versus non-direct recognition. If they don't know the difference, and they're selling you a load of crock, they don't even know what you're selling or what they're selling you. So direct recognition policies mean that your money has to be in the account to earn that investment return. Non-direct recognition policy is the one that you actually want. That means when your money is lent out, let's say you pull your money to buy a real estate property, you're still earning that return on the money, right? So direct recognition or non-direct recognition is the way to go. Here's the thing. Everybody sells these policies as, oh, you can do whatever, and when you make money on the money even when it's not in the account. Only on a non-direct recognition policy, but most of these guys don't even know the difference, let alone they will tell you the difference. So they'll sell you a direct recognition policy that doesn't do that and not tell you. They'll give you an example of one thing and then do something else, because insurance salesmen are incentivized for their commission. And so the other thing is that for this to really be a great strategy, you should have a low death benefit and a high cash value account. But that's not where they make their commission. So a lot of times they'll push you to a higher life, death value, death benefit, and a lower cash value, which actually hurts what you're able to do. And they won't tell you because obviously that helps their commission more than you. And it is what it is. People suck. So you want to have it structured correctly as far as higher cash value, if that's your goal, rather than death benefit. You want to have a non-direct recognition policy, and you want to have it something that you can fund ahead of time. So you want to be able to overfund it. You want to be able to cut a $100K check, overfund it on day one, and be able to use capital right away. Otherwise, you're going to be steamrolling it and slow rolling it forever. So you want the advanced, there's a special term, I can't remember it right now, but the faster ones that you can overfund right away and have access to your capital. Look, there's a lot of things to look out for, and honestly, I'm not an insurance professional. I've just done a lot of homework. I see all the red flags with these guys. The biggest thing I can tell you is find someone legit. So I recommend Will Duffy and Brandon Jenkins. They've both been on the podcast. They both seem very genuine about this. There's a couple other people out there that I would recommend, but I know Brandon very, very well personally. I would absolutely talk to him. He's in the War Room Mastermind. He's a great, great, great guy. And then Will Duffy, also very intelligent, very good at this, writes some policies for friends of mine. And I would say either of those two guys would just be a really good person to talk to who will help you structure this correctly. So if you want some contact info, let me know. Or just go listen to the podcast, and their contact info is right there. And it'll answer even more questions about this. Bottom line is, anyone selling you whole life is selling you whole life, right? So they're selling you. Make sure you do your homework and get the policy that actually makes sense for what you need. Have a great day, and make sure you subscribe.